Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. As I've said here for many weeks, months even, there are 3 important congestion zones which in turn have become either support zones or resistance areas. We are today in amongst the highest and possibly the toughest of these congestion zones, between 97.50 to 99.95 area, though this week we have managed to briefly stay above it, only each time to get slapped down. Below we have the 93.95 to 96.06 area, and finally the smaller one well below the current market between 91.38 to 92.56. This last one saw the market push up through it 6 weeks ago, then get capped by the next congestion, that 93.95 to 96.06 overhead area, plus at the time the declining short medium moving average, currently 92.44. And we ended up back down below it again before 2 weeks ago tackling it again, and last week pushing up through it. The bullish closing along white Mariposa you can see on my daily chart on Tuesday last week. Well, that was the market traversing a free area up to the 97.50 to 99.95 area. Now prices have this week managed to push up through this congestion area, but have not as yet stabilized over it. This is despite little being overhead until the February 2011 and need the whole of the 2022 high at 10.190. And that capped markets back in late April, and with limited resistances beyond this until the April 2022 high at 10.580. However, there is also the early August to early September bullish Andrews pitchfork, highlighted in dark blue on my daily chart that I drew 2 weeks ago. Prices are currently testing the upper time overhead, to moving towards testing the upper time overhead, currently at 10.106, after briefly breaching it late last week, as well as yesterday. So far, this upper time and the bullish Andrews pitchfork overall have not been broken, not yet. I said about this pattern 2 weeks ago, and I quote, "I am not in love with this pattern, even if it is the first bullish pattern of note I've drawn for quite a while, and I'm quite prepared to finesse this into a shallower bullish shift pitchfork or even retire it completely. But for now it's doing its job of showing a nascent bullish angle of attack higher." End of quote. Well, today it is still doing that job, and it is no longer a nascent bullish angle of attack pattern. LME 3-month aluminium. There is still a lot going on here in this daily chart. The move high over March, April, May, and I suppose even the most recent one from early August originates back to late February, the market breaking higher from a diamond pattern type formed back then, between late October 2023 to late February 2024. Now please remember this, as it is this congestion generated by this diamond pattern on the wide between 2100 to 2400, but really between 2156 to 2297, that caused the recent rise since late July, though obviously not the original pattern itself. Okay, so going now to the peak in late May, the market back then made new recent highs, but at the same time sowed the seed of its own bullish destruction by making a 2-day pipe top that was also part of a larger 2-week horn top. Prices in essence moved lower, with a small halfway hesitation in early June and a larger one over mid-June to mid-July till the end of July, when the decline was stopped by the extension to the neckline, currently at 2220, of the June to July 2023 reverse head and shoulders neckline pattern. From this base, prices started to build again and experiment with moving upwards. Thus, we saw a move higher from the same price zone as the earlier diamond bottom pattern, roughly between 2400 to 2100. In the process, over early to middle August, the market constructed a small ascending triangle pattern, reaching the primary and secondary targets on the upside and pushing up through some significant resistances now turned supports. The notable ones were and are the long moving average, currently 2406, the twin neckline extensions of the October 22 to May 2023 head and shoulders top, which is currently at 2329, and the March to May 2023 head and shoulders top, currently at 2342. The congestion zone from mid-June to mid-July, between roughly 2485 to 2563, containing the key levels at 2485, 2508 and 2563, plus the bright red middle time, currently at 2548, of the mid-December 2023 to late July this year pattern, the bullish shift pitchfork. I also drew 2 weeks ago a shallow bullish shift pitchfork for the late July to early September move, and I said at the time, and I quote, "This last one I'm happy to finesse or even retire as the market demands," end of quote. Well, the market demanded I finesse this to a more acute bullish Andrews pitchfork and highlighted in bright green. As you can see, prices have been fondling the middle tine, which is currently at 2640 for the last 2 weeks. So this is an obvious better fit. Outside of these, we had a further resistance overhead that became a support at the December 2021 low at 2581, plus active support and resistance levels close to the market at 2622, 2650, and what I said 2 weeks ago was, and I quote, a somewhat dubious congestion band between 2666 to 2680 that right now contains the purple middle time, currently at 2696, for the bullish Andrews pitchfork with the same move as the bright red bullish shift pitchfork. I should point out that the purple bullish Andrews pitchfork has so far been studiously untested, end of quote. Well, the purple middle time has moved higher, but the overhead congestion band is still there between 2666 to 2680. All this activity has left one pattern behind, a late June to date bullish halfway hesitation pattern, which has just about reached its topside target up in the 2650 area. All this is making me think that perhaps, just perhaps, the market could do with a bit of a rest right now before any fresh attempt higher. You see, I have nothing behind this other than a fear of an overextended market on the upside not being able to generate the energy for any further attempts higher. LME 3-month lead. There are a number of significant features on this daily chart. The first I'd like to mention is the immediate overhead wide band of congestion originating from April between roughly 2135 to 2186. A congestion area that showed itself at the peak 5 weeks ago and again last week and this week. This area contains the 50% Fibonacci line of the March 2020 to March 22 move at 2135, the nearby gold long moving average currently 2123, and edging down the mauve declining medium moving average currently 2133. The next is the late July to late August reverse head and shoulders pattern. It is far, far from a pretty one, and I am loath to even mention it, but it does exist, and that rise peaked 5 weeks ago. And that was all it could achieve. But it did lead to another pattern, which I'll discuss shortly. Going back to this reverse head and shoulders pattern, I said 2 weeks ago, and I quote, I now regard this pattern as a rarer reverse head and shoulders continuation pattern. It nevertheless has left behind a neckline, currently at 1945, that had helped to show the bearish angle of attack if only temporarily. End of quote. We have some congestion below, which on the face of it should have been influential, but in practice has not really been so, at least since August. It is the congestion, Fibonacci based and otherwise, between 1995 to 2002. This was followed by the June 23 low at 1976, which looked, how shall I put it, less interesting. And then the 2024 low in August at 1917, which I suspect is a function of the nearby 2021 low at 1908. There's also the neckline extension, currently 1947, of the July 2023 to February 2024 head and shoulders continuation pattern. The reason I mention all these supports below is that they contributed in eroding the decline we saw in early to mid-September, enough that it has stopped and turned back upwards and brought about the market and brought about possibly two bullish patterns. I should add at this point that it all very much depends on whether prices can overcome this overhead 2135 to 2186 congestion band. But we have still the bright red early August to early September bullish Andrews pitchfork, say highlighted in bright red on my daily chart. Prices are at this time in between the middle tie and above, currently at 2165, and the lower tie below, currently at 2044. The second pattern is the almost ready, though not yet triggered, mid-July to date double bottom. This has a neckline in the 2135 to 2140 area, and as I previously stated, has not been triggered, but that doesn't stop me from laying out some potentials topside should it happen to be so before next time we speak, or I speak. Thus, a primary potential, not a target yet, but a potential, would be up in the 2273 area, with a secondary, harder to reach potential up in the 2324 area. All it would need to kill these two would be for the market to just go sideways and open all the possibilities of a shallower bearish shift pitchfork and even a triple bottom. So just watch carefully.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.